What are points on a mortgage? If you're getting a home loan, you may have heard the term points or mortgage points. You may have also heard the term discount points. You may be surprised to learn these are actually the same thing. So what exactly does points on a mortgage mean? Before I answer that question, please do me a favor and subscribe to this channel. I have a true passion for home loan education and love helping people realize the dream of home ownership. I do work with a lot of first-time home buyers as well. So if you know someone who would benefit from this video, please share it. All right, mortgage points or discount points are essentially a cost for an interest rate. And what will drive that cost for the discount point and the associated interest rate is going to be a lot of different factors. So it's going to vary based on the lender. It's going to vary based on the loan program. It's going to vary based on your credit score. It's going to vary based on what your overall goal is with your home loan. And this is really important. So as Dave Ramsey likes to say, do not pay discount points. Well, I think that Dave, in a lot of cases, is right, and in some cases may not be right. So really, as we're helping people to kind of evaluate, does it make sense to buy an interest rate down by paying discount points? A lot of what's going to feed that is how long is somebody going to be in the home loan? Not the house, but the actual home loan. That is a crucial part of the equation because we'll actually show you the math. So what is your interest rate without buying down with discount points? And what is your interest rate with paying a cost, i.e. discount points to buy the rate down to X? Once we know that, we can run the math and tell you, okay, without discount points, here's what your rate is, here's what your payment is. With discount points, that's buying your rate down by X percentage, and here's the savings per month. Essentially, we're going to take that savings per month, divide it into the cost of what you're paying in discount points, and let you know exactly how long you have to be in that loan before buying down interest rates is warranted. Now, that's really a very simple type of thought process, and we do that quite often. Now, there are going to be situations that if you have a lower credit score, you may not have a no discount point option. It just is the reality of the situation. So the home loan program, credit score, the strategy, the overall strategy, how long you think you're going to be in the loan. If what is important to you is funds to close, if you're limited on funds to close, then you may opt for a no discount point option because it will reduce your cost at closing. So really, I think that there's a lot of, hubbub out there about discount points, no discount points. Honestly, it's a very, very individual type of decision. And having an experienced mortgage lending team that can hear what you're saying, understand and analyze your particular scenario, that's what's going to drive your options. And here in our world, we will show you both. We're going to show you what does a no discount point interest rate look like for you, as well as an interest rate showing you the cost of paying down discount points and what that rate looks like. When we think about discount points in general can be any percentage in cost related to the loan amount. So for example, if you are refinancing, let's say, and you're looking at paying one discount point to buy that interest rate down, and maybe you're buying that rate down by 0.25% in interest rate. So what you want to do is work with your lender to kind of understand what your break-even point is. If you know that your break-even point on paying that discount point, let's say, is 4 years, and you know you're going to be in this house. This is your house for the next whatever, 5, 10, 15 years. Now, none of us ever really know for sure, but we have a fairly good sense of how long we think we're going to be in the home and the home loan. And so really use that information to help you decide on whether it makes sense to buy down the interest rate or not. I just had a client, we walked through this very thing, and initially he thought he was going to be in this house for 15 years. So in his scenario, the break-even point was about 6 years. And even though your monthly payment may not be changing dramatically by, let's say, 0.25% in interest rate, the real savings is interest paid over time. So once you look at that and you are looking at what happens in 5 years, 10 years, 15 years for 0.25% difference in interest rate, it can add up. So in his case, initially, he thought, yep, I'm going to pay the one discount points. Well, as he's moving through the home refinance process, he actually heard from his employer that he may be transferred out of state in a couple years. So based on that information, we backed up. We reapproached the scenario because now he's not sure that he's going to be in the house for long enough to be able to have it warrant paying discount points to buy down that interest rate. So we put him in a no discount point option and he is set to close. As a reminder, it's always recommended to talk with an experienced lender. If you want to talk more about your personal scenario, please feel free to call or text 480-725-0150. Otherwise, if you have questions, comment below. And don't forget, like, share, and subscribe. Until next time.